Small cap funds are back in conversations. Not because they are performing well right now, but because investors are debating whether this recent underperformance is an opportunity or a warning. So today, in Funda, we are breaking down the Nippon India Small Cap Fund. We'll help you understand what this fund really is, what it has done well, and where it has failed historically. And you'll be able to analyze whether it actually fits your portfolio in today's market. First, let's take a glimpse on the history of the fund house. Did you know the Nippon India Mutual Fund was earlier known as Reliance Mutual Fund? In 2019, Japan's Nippon Life Insurance acquired a majority stake in the AMC and it was rebranded. As of financial year 24-25, Nippon India AMC manages over 5.5 lakh crores across mutual funds. It is among the top 5 AMCs in India by AUM. So, what actually worked for the AMC? Post 2019, risk frameworks became tighter. Debt portfolios were cleaned up. Investment decisions became more process-led. Equity funds focused on diversification and position sizing. Let's understand the Nippon India Small Cap Fund. The fund was launched in September 2010. So it has seen bull markets, bear markets, and everything in between. Since 2017, it has been managed by Mr. Samir Raj. That matters because consistency in fund management reduces uncertainty. The fund follows a buy and hold style with low portfolio churn and very high diversification. The fund tries to survive long enough to compound. This fund invests in small cap companies, which means businesses outside the top 250 by market value. The focus is on companies with good growth, quality management, and reasonable pricing. Risk is handled in two ways. First, by buying with a margin of safety, and second, through diversification. By staying focused on smaller companies, the fund aims to deliver better risk-adjusted returns over time. Is this fund a good fit for you? Let's start with structure. This is a small cap fund that's been around since 2010. So, it has survived multiple market cycles. It's been managed by the same fund manager over 8 years, which reduces decision uncertainty. Portfolio turnover is under 18%, which tells us this is a patient buy and hold strategy and not frequent trading. Now, size and cost. This fund manages over 68,000 crore rupees, making it the largest small cap fund in India by AUM. That brings diversification and operational stability, but it also limits agility during sharp market phases. On the cost side, the expense ratio is lower than the category average, which quietly supports long-term compounding. Let's talk about risk behavior. The beta is below 1, which means the fund has been less volatile than its benchmark. The Sharpe ratio shows that returns came with reasonable risk control, not reckless positioning. And the capture ratio suggests the fund did not chase overheated markets aggressively while still protecting downside reasonably well. Over long periods, the fund has delivered higher returns than its benchmark. But those returns did not come smoothly. During 2018 to 2020 phase, the fund saw a drawdown close to 50%. Recovery took time. This highlights how demanding small cap cycles can be. What matters is not avoiding drawdowns, but having the ability to recover over time. These numbers don't tell us whether the fund is good or bad. They tell us what kind of behavior this fund demands from the investors. Nippon India Small Cap is not a fund that works because it is popular. It works only if investor does their part. The fund has diversification, long history, and a process-driven approach. But it also comes with volatility and long recovery phases. At Finnovate, we don't look at small cap funds as return machines. We look at them as behavior tests. So the question isn't whether this is a good fund. The question is whether your portfolio and temperament are ready for it. That's our breakdown of Nippon India Small Cap Fund. If this helped you understand the fund better, like the video and subscribe to our channel. And tell us in the comments which fund you want us to cover next. See you next time.